What's going on, team, and welcome back to the third and final part of this series of how I approach the markets trading the Strat made by Rob Smith. So if you haven't watched the first two videos, go and watch those because we cover over what a 1, 2, and a 3 candle are, as well as the 4 different combinations that I use in this market. All right. Today's video, I'm just going to cover over what broadening formations are, as well as the concept of liquidity sweeps when using those combinations. Okay. So broadening formations is just a simple chart pattern that I'm sure you've seen in trading books and all over social media. Okay. It is just a simple wedge play. So a wedge is just that triangle, and the market is constantly making lower lows, higher highs, lower lows, higher highs, lower lows, higher highs. Okay. So the wedge is broadening, meaning it is expanding. The range is getting bigger over time because we are making higher highs and we're also making lower lows. That is the simple concept of what a broadening formation is. So again, you can see the market creates a high here, drops, makes a low. Then it breaks the high, then it breaks the low. And again, it breaks the high. So now you can see that the range is getting bigger here, okay? So this is what I call and what other people call a broadening formation. So I'm going to talk a little bit about that today and why I look for these liquidity sweeps and broadening formations within the market in conjunction with the combinations that we talked about in the previous video. So again, if you don't know what liquidity sweeps are or liquidity in general, I do have a video on that within the Phoenix Investments intermediate trading course on our YouTube. So I can leave a link to that in the description. But I recommend watching that first before watching this one in case you don't know what liquidity sweeps are. Okay. When we're looking at this broadening formation here, again, we have a high, a low, another high, and another lower low. As you can see, the market broke above that high, reversed, and came all the way back down to this low. The reason why I look for these broadening formations is again because we are sweeping liquidity. And after we sweep liquidity, we are bound to go to the opposite side of the opposing range, meaning that we are going from buy side liquidity to sell side liquidity, then from sell side liquidity back to buy side liquidity. And that keeps on happening. And when you really think about it, that's all a broadening wedge is, or in other terms, a broadening formation, right? Where it creates a high and it creates a low. Then market breaks above that high, creating higher highs, and it comes all the way back down to sell side liquidity. Then it sweeps sell side liquidity, making lower lows. Then it comes back in to go where? All the way back to buy side, creating higher highs. And then it's just a repeating pattern of lower lows, higher highs, lower lows, higher highs. But that concept is also liquidity sweeps, right? Where it generates liquidity, comes back into the range, then seeks the opposing side or the opposing liquidity. So whenever we get these liquidity sweeps within the market, this is where I am looking for those combinations. So like I mentioned towards the end of the previous video, I said that you need to have context or you need to have a narrative within the market before looking for these combinations. So I mentioned the example with a range having support and resistance, and you look for a short combination at resistance, and then you look for a long combination at support, right? It's the same situation here. So as soon as we sweep buy side liquidity, so this is your buy side liquidity, that yellow line, you're going to look for the combinations. And in this example that I made for you guys, what is the combination that we have here? I already labeled it for you guys, okay? But it's a 1, 2, 2 reversal, okay? So that 1, 2, 2 reversal, okay? Where it goes 1, 2 up, then the third candle goes 2 down. So this is a bearish combination on top of us sweeping buy side liquidity. So you see how not only did we get a sweep of buy side, but now we have a bearish combination in play. So now you have two things in your favor telling you downside. And then your target would be the sell side liquidity or the previous low that we made here. Market comes all the way back down, takes out the sell side liquidity. Then the market gives us a 1. As you can see right here, we're stuck inside 1. Why? Because it never broke the high or the low of the previous candle. Then the next candle gives us a 2 up. So now what is this? It is a 1, 2 up directional play. So this is a bullish setup. So this is bullish. So we have a bullish setup after sweeping sell side liquidity, or in other terms, support, however you view it. So we're at support, we've swept sell side liquidity. Now we have a bullish directional combination in our favor. So now I can favor that 1, 2 to come and take out what? The buy side liquidity. Because again, a broadening formation is just taking out old lows, taking out old highs, taking out old lows, taking out old highs, old lows, old highs, right? And it just keeps doing that until the market is ready to break out. And then it breaks out, goes down, or breaks out and goes up. But if you're getting in here and it breaks out, you're basically getting in peak bottom, right? Or peak top if it's short. Let's say it goes 1, 2 down up here. You go short off the 1, 2, boom, it expands, displaces, you get the best possible entry. So what you need to do is be patient and wait for market to obviously develop itself and form these broadening formations or sweeps of liquidity. Now, I'm going to show you guys some examples of broadening formations that have happened within the past couple of weeks. So here's an example that I was able to find. So as you can see in this screenshot, the market creates a low, then creates a high. Market sweeps the low, claims the range again, comes all the way back up to the buy side liquidity. After sweeping the buy side, we get reversal all the way back down to sell side liquidity. After sell side liquidity is taken again, we get our 1, 2 up directional signal, reclaiming the range to go where? Back all the way up to buy side liquidity. So you can see how the market is expanding with this broadening formation, taking out sell side, taking out buy side, taking out sell side, then back up to buy side. And at the same time, after we take out sell side liquidity, we have a 1, 2 up actionable signal, right? This is directional, and then it stays 2 up all the way until we get to buy side. This is a prime example of how you can use one of those 4 combinations, I should say, in conjunction with broadening formations, also known as liquidity sweeps. So again, broadening formations, it is just a simple range that is expanding over time, taking out old highs, taking out old lows. And at those highs and at those lows, we look for those combinations that I mentioned in the previous video. So that's the concept behind broadening formations and using those actionable signals there. So if you have any questions on this video or any questions at all relating to this series, please reach out through the Discord community, or you can contact me individually through the DMs. Okay. Hope you guys have a great rest of your day, and I hope you guys learned something, and take care.